I know that dividend stocks are an excellent path to wealth because I've binge watched the Average Joe Investor channel here on YouTube. I want to get started building a future for my family and create a financial legacy that will last generations. But I don't have $500 to $1,000 to invest every single month. What is really possible when you start with a small dividend portfolio? And if I know very little about dividend stocks, what are all the things I need to know in order to get started with a $100 per month dividend portfolio? I know what you're thinking. Will $100 every single month really make a difference? Can I accomplish anything meaningful? I took a look at some historical data and let me show you what's possible. Okay, so we took a look at 5 different dividend stocks and we looked at the past 9 years of price history and dividend history. We looked at AbbVie, Walgreens Boots Alliance, Realty Income Corporation, Enbridge Incorporated, and last, the Altria Group. All companies that have been paying dividends and raising their dividend every single year since at least 2013, though some of these companies have been raising dividends for much longer than that. If we contributed $100 a month starting in January of 2013, every single month, what would be possible? If we look at these individual holdings, we can see that the top portfolio value was by far AbbVie, worth approximately $26,000 if contributing $100 a month. And on the low end, we would have the lowest value being Walgreens Boots Alliance, worth $10,000. This white line in the middle would have been the result of the portfolio if we held all 5 of these dividend stocks equally weighted 20% each. That portfolio would be worth $16,595.73. Here's a look at cumulative dividend income, the amount of total dividends earned over that entire time frame. Again, we've got 5 different lines here for the individual holdings, and then we've got a white line in the middle if it was a portfolio of these 5 different dividend stocks equally weighted. This is the portfolio value right here. Total cumulative dividend income for the portfolio would be just under $2,800. And then if we look at year-over-year dividend income just from a portfolio perspective, after 9 years, you can see that the dividend income is increasing every single year. In year 1, we only earned $26 in dividends. However, in year 9, we're earning $739.83 in dividends, and this number continues to grow every single year. This is just 9 years of contributing only $100 a month, which I think most average Joes out there can do. This is not assuming any increase in the monthly contribution either, just $100 every single month. Dividend investing is not a sprint, it is a marathon. It is a long distance race. The longer you continue to run, the better the results that you get. If you were looking for a detailed step-by-step process to get started with a brand new dividend portfolio, you've come to the right place. Here are the key decisions and actions you need to take to get started. If there's any information I cover in this video that you would like for me to expand on further, make sure to leave your 2 cents down in the comments below. The first major decision is whether you are going to use a retirement account or a regular investment account. A retirement account comes with tax benefits as well as restrictions on when you can access the money. You may already be investing for retirement through your job's 401k retirement account, or maybe this is your very first investment decision. This decision should be made based on your unique and specific investing goals. What are you saving for? And when do you need the money? If you're saving for retirement, then using a retirement account such as a traditional IRA or a Roth IRA may be the perfect solution for you. I will link to a video in the description below that will help you make this decision. It is 2022 and there are now so many different options available for the average Joe that flat out didn't exist 5 to 10 years ago. Each of them have distinct benefits that you may find beneficial to you and what you value. I currently use Fidelity and I also have a small account with M1 Finance. I have also previously used Robinhood. Robinhood has a great interface which can be very helpful for new investors, and they do not charge any commissions when you buy or sell stocks. But they do not offer any retirement accounts as of the making of this video. M1 Finance is a great investment company that also does not charge any fees for buying or selling stocks or ETFs. They do offer retirement accounts, and they have a unique way of letting you set up your investments into an investing pie, which helps automate your future contributions into the account. This is a great option for new investors, and you can get started with M1 Finance by clicking the link in the description below, which will take you to M1 Finance's website and show you exactly the dividend stocks that I personally own. Okay, so you have your account open with the investment company of your choice and you're ready to start buying investments, but what investments are the right fit for you? There are two main strategies that you can pursue here. You can purchase individual dividend stocks or dividend ETFs. Individual dividend stocks are companies that pay dividends to investors. These companies are generally past the growth stage and generate more cash flow from their business than they can invest wisely to continue to grow the business. So they distribute this excess cash and profits to investors in the form of a dividend. Dividend ETFs are a group of individual stocks. Some dividend ETFs hold as few as 20 to 30 dividend stocks in them, and others have hundreds of dividend stocks. You can also choose to buy both individual dividend stocks and dividend ETFs in your portfolio. Dividend stocks are easier to capture higher yields and higher dividend growth rates based on the individual investments. However, you do have to create your own diversification, meaning that you have to make sure you have enough different dividend stocks so that all of your risk is not in one single investment. There's also a risk of having dividend cuts. This is when a dividend stock decides, based on overall prevailing market conditions, as well as the company's balance sheet and their cash and their future outlook for the business, they decide that the dividend they're currently paying is too much and they need to cut it or keep it the same instead of raising it. When you own individual dividend stocks, it takes a little bit of extra work to make sure that your dividend stocks are not at risk for a dividend cut in the future. With dividend ETFs, on the other hand, we have instant diversification because every dividend ETF holds multiple dividend stocks. This means that any impact of a dividend cut to an individual stock is minimal. You can also purchase this one single dividend ETF and just be done. That being said, with dividend ETFs, generally you will have lower dividend yields than with individual dividend stocks, and it's a little bit harder to know if you are duplicating investments because you might have one dividend stock that is present in all three dividend ETFs that you own. To be clear here though, you can choose either investment type or a combination of them both and be successful. It just depends on how much effort you would like to put into this investment account. There are a few different dividend strategies that you can pursue, and it's really going to ultimately be up to you and what you're trying to accomplish to decide what is the best fit for you. The two main strategies here would be a high yield dividend strategy and a dividend growth strategy. A high yield dividend strategy will focus on dividend investments that have a high dividend yield. When I say dividend yield, I mean the measure of how much dividend you get compared to the price of the stock. These investments create more cash flow for you now, but the price appreciation in the stock price will generally grow slower than other dividend stocks and potentially could even lose value. Additionally, the dividend growth rate of these investments is usually lower. These investments generally are better suited for investors who will need the cash flow either right now or very soon. On the other hand, we have a dividend growth strategy. These investments are not as much rated by their dividend yield as they are by their dividend growth rates. The dividend growth rate measures how much the dividend increases every single year, or over a 3, 5, or 10-year period. The dividend growth rate is by far the most important element to building a dividend portfolio that has increasing cash flow every single year. This doesn't mean that we don't value a dividend yield and not having a high dividend yield. In fact, we want as high of a dividend yield as possible while also maintaining a strong dividend growth rate. If you're pursuing a dividend growth strategy, you will often look at dividend yields in the range of maybe 2 to 4% at the high end, but really prioritizing dividend growth rates exceeding 7 to 10%. Over here, I've got a secret for you. I'm in the process of remaking my office and making it a place that I can also film, and I'm adding some unique elements to it. I wanted to give you a sneak peek on one of those things that I'm really excited to share with you guys. Check it out here. I'm going to show you right over here. Stay tuned for future surprise sneak peeks at what this office is really going to turn into. I am not a financial advisor, and therefore I cannot provide you as an individual investor any type of financial advice. That being said, I am more than happy to share with you what I own in my own dividend portfolio, why I own what I own, and help you with a few resources to get you started on your own dividend journey. In my high yield dividend account, I own both individual dividend stocks as well as a few high yield dividend ETFs. Some of the dividend stocks in here include Arbor Realty Trust, Enbridge, Manulife Financial, Altria Group, Northwest Bank Shares, and then the dividend ETFs I recently bought back into include both QYLD and RYLD, which are high yield Global X investments that are covered call ETFs. All of these investments are in this account because they have high dividend yields. Some of them have good dividend growth rates as well, but the real takeaway here is high dividend yields now. And you'll see that the dividend yields range from as low as 4.35% to as high as 11.8%. And then I have my core dividend account. This includes investments that have really high dividend growth rates while also a healthy dividend yield. This includes investments such as AbbVie, ABBV, Broadcom Inc., AVGO, Bristol Myers Squibb, BMY, First of Long Island Corporation, FLIC, GILD, which is Gilead Sciences, Realty Income, and MSC Industrial. And you'll notice that the dividend yields here are lower, ranging from a low of 2.82% to a high of 4.47%. I find all of my dividend stocks through my monthly dividend stock spreadsheet, which I created and I maintain on a monthly basis, and I make it available to every single member of my Patreon community. If you'd like more information on how to get access to this spreadsheet and join the Patreon community, check out the link down in the description below. If you liked this video, check out these videos right over here. It's gonna be a great next step for you on your dividend journey. And if you haven't done it yet, hit that subscribe button to get more content from me and leave your 2 cents down in the comments below. That's all I got for you guys in this video. Have a great rest of your day, and please continue to stay healthy, both physically and financially. Have a good one.